Ryan, thank you so much for joining us here at the studio for SuperReturn North America. Fresh from a panel today looking at the role of hedge funds as portfolio diversifiers. So just tell us what you're seeing in that space.
So for us, hedge funds are stream diversifier. And what I would say that's changed than the way things used to be is people used to have a hedge fund portfolio, but really wasn't too clear what that portfolio was supposed to do. And now people are saying, well, what is the role of this particular hedge fund in my portfolio? And we're seeing that more on the diversifier side, because we're increasingly what we're seeing is if you go in the liquid world, you're seeing increasing levels of concentration. And if you go into the illiquid world, you're seeing longer periods of illiquidity. So hedge funds sit in the nice middle bucket of that semi-liquid where you can play various strategies.
So how are LPs evaluating that opportunity, the hedge fund opportunity, in terms of it aligning, I guess, with their portfolio objectives at the moment?
So a lot of times what we're seeing LPs do is saying, I'm really worried about the liquid markets. The liquid markets have been great, but I'm worried about the concentration. I'm worried about, hey, if there's a sell-off, where do I go to hide? What will be protection? And the hedge funds have found that role, especially as interest rates have gone up. We've seen hedge funds have a stronger role in doing so, because if you go back to 2022, they were the only thing that worked.
So when those investors are looking at hedge funds, what are their key considerations? Because obviously we are looking at hedge funds having sort of more complex structures, higher fees attached. So how do they make sure that they're aligning with what they need to do in their portfolios with those hedge funds?
So I think one of the first questions you ask is, can I do this someplace else? And can I do it someplace more cheaply? And a lot of times with the hedge funds, you can't. I would say when considering the hedge fund fees, we did a study around hedge fund fees. And what you found was some of the best performing hedge funds had some of the higher fees. It's just, do they add the value relative to the fee that makes sense? And again, can I do this someplace else? And a lot of times you can't.
So what's key to spotting those opportunities? If you are, describing their hedge funds having that potential, what should people be aware of though? And, what risks are there attached?
So hedge funds are what I would classify, they're still often in LP structures. So the risk you have is that you could go to get your capital, and they can gate you. I mean, that's been done before. You could have also, we've gotten past the gate, and they could give you in-kind distributions, which means, what am I going to do with this? I didn't have the background to be as sophisticated to actually manage the asset myself. Other structures, though, we're seeing drawdown structures too, where the hedge funds are sitting back with the ability to call capital when the opportunity, when they see an opportunity and it exists. But one of the things that I think people have to be most considerate of is hedge funds are strategies. So it's hard to say they're an asset class, because you're often saying, well, it's a lot of different things inside of them. But when you get a real sell-off or a reaction, do they give me some protection, something different? And a lot of times, if they offer that diversifying component to it, you want to be able to take capital from there and rebalance it back into the other areas of your portfolio.
We hear a lot at our events about relationship being key to so much in private capital, private markets, all the asset classes.
Yeah.
Tell me about that and what that looks like with hedge funds and LPs.
So relationships are, I think, key. If you give advice to anyone, and a lot of times when I talk to younger people, I said, it's one thing to go to school and know everything. And the second part is that they always say the wise man knows knows everything. The shrewd man knows everybody. And sometimes the greatest opportunities can be there and everyone can know about them, but it's your ability to access them, and those relationships are very key. Hedge funds, I think, have also tried to improve their relationships. Past 10 years has been relatively tough for hedge funds in general, because low interest rate environment. As that's come back, they've realized, okay, how can we add more value than typical? And a lot of those are forming relationships with their LPs going, we have great access to information, differentiated information. Can we share that with you to help you with some of your investment decisions?
And they like to sort of portray themselves as that nimble offering that you're describing there, don't
Correct.
they?
The nimble offering, it's what, a lot of times when you're looking at a hedge fund, you always have this tremendous amount of depth sometimes, and a very key area. Like even if you see markets like commodity markets or something like that, what they may know about oil and what's going on there can be very different than, let's say, your typical long only shop.
So going forward now, just finally, by the sound of it, you expect to see hedge funds featuring a lot more.
I do, and they're a large part of our offering, and we expect them to continue to play a role. But I can't say every hedge fund strategy; it's particular types.
Ryan, thank you so much for sharing your insights. Always great to have you in the studio.
Thank you for having me.